Hi, everybody. This is JC Peretz with Allstarcharts.com, and today is Thursday, August the 17th of 2017. We're going to take a look at some charts today. We're going to start with Palladium. Real interesting move. We are now breaking out above the former highs from 2014. So a really interesting point. Listen, if this was our original target, I mean, this is where I thought we'd go. We wanted to be fading this 900 level. So that, I mean, this has been achieved. But now we're continuing to remain above it. So now we're reevaluating. We have more data. And I think that if we are above that 910 level, those 2014 highs, I think that we can certainly push about 1200. So that's a ways away, and I think that would be really bullish just for metals in general. This has been certainly the leader amongst all of them, so one to pay attention to for sure. Here's the euro, similar breakout above former resistance. This has really been in a sideways range for about 2.5 years now. I'm not convinced. Listen, the longer it stays above these former highs, above this range, I think that, it's certainly, you can certainly make a bullish case for it. Look at the downtrend line here that we've exceeded. We're holding above those former resistance, right? So, I mean, if you take the, right, so that former resistance there, I think this is just a great example from failed moves come fast moves in the opposite direction, right? There's your move. So is this going to be a failed breakout and then a correction back down here? I could certainly see something, I don't know, something like this maybe. Something like that would be certainly possible. Unfortunately, it might take longer. It might be kind of like, something like this, something like that. You know what I mean? And it might take a little bit longer, and that's a little bit annoying. But regardless, I think it's positive for sure. Bearish dollars and bullish euros if we are above those highs. So let's call it 117 and change. So let's move on to the VIX. Something interesting. We popped above 15 today. We closed about 15 and a half or so on the VIX, on the Volatility Index. Which, remember, this is a measurement of the premiums being paid on the options market of the S&P 500. That's all that it is, right? So a lot of people call it the fear index or the fear gauge or whatever it is. There is a sort of a negative correlation, but just because a VIX gets to a certain level doesn't necessarily mean that it can't go higher, right? It doesn't necessarily mean it needs to reverse either. So that's kind of just like this common myth. But every time, this year that we've gotten above this 14.5, 15 level, it's been a great opportunity to buy within this uptrend. So is this time different? It quite possibly could be, but we definitely know that there are huge commercial shorts that are short the volatility index futures. So like when you get these spikes, like the unwinds of those volatility trade that need to cover the shorts, that gets adjusted onto the S&P 500 premium, which obviously gets adjusted on the index. So it's a little bit more complicated than just buying when it gets to those levels. So I want to take a look at another chart. This is Russia against crude oil. I looked at all of the ETFs today, and I saw that the best performing exchange traded fund globally was Russia, RSX. And it's interesting because crude oil kind of looks like crap, obviously, right? It's just a big hot mess. But what we're seeing in Russia as a leader there of the global indexes, that's interesting for sure. So here we're looking at Russia on the bottom. This is the Russian Exchange Traded Fund, which is U.S. dollar, pricing U.S. dollars, by the way, and crude oil, also priced in dollars. So they look exactly the same. So the strength that we're seeing in Russia today is certainly telling us something, right? So let's take a look. Here are energy stocks in the United States, XLE, and we're also looking at Russia, RSX, down below. And, as energy stocks are getting clobbered, I mean, God, the oil services, the explorers and producers, I mean, just a bloodbath out there these days. And then Russia is the best performing ETF, which is it makes you kind of say, what's going on here? So they look the same. They look very similar. Russia has a lot of energy exposure, obviously. So this is just an interesting area of relative strength that I think is worth digging deeper. And then here you can see Russia compared to U.S. stocks. So the RSX relative to the XLE And look at that like 0.30 area. You know, that was support in 2013. When that broke in 2014, that's when it really started collapsing. And then, you know, from the rally in relative strength anyway, you know, we got back to that level. You know, we were there earlier this year. And after some consolidation for 6 months, we're now breaking out of this big level. So I think from a relative perspective of Russian stocks compared to U.S. stocks, I think that's just an interesting, you know, sort of thing that we want to take a look at. And then what I did, I was curious. I created what I call a safety index, right? Because when there's a lot of fear in the market, money flows into certain areas, right? When stocks are getting crushed, right, money's going to go into, everybody says gold is a safe haven. Well, not really. You know, it is to a certain extent, but when money gets scared, I see it flowing fastest into U.S. Treasury bonds and more even faster into Japanese yen. So because of the carry trade and all this stuff, I mean, it doesn't really matter why they're doing that. But when money is really scared and, you know, trying to flee, essentially, they're going to go to yen, they're going to go to Treasury bonds and gold, right? Gold is a lot more volatile than the other two, so I kind of changed the weightings around. But at the end of the day, just to smooth things out, it's those three kind of on an equally weighted basis. And you know, you look, and that's what this is, by the way. So this is that equally weighted, that safety sort of trade. It's not equally weighted. It's volatility weighted. But regardless, it's not an uptrend. So is this something that we really want to concern ourselves and be like, you know, is money really flowing into these areas? And if you want to look at them on an individual basis, here are U.S. Treasury bonds. This is the TLT. You know, yeah, we're, you know, higher highs, not really higher highs here, kind of a mess with a downward sloping 200-day moving average. Momentum still in a bullish range in TLT, but that downward sloping 200-day, you know, I don't love it. You know, that one really stands out. You know, this little island reversal up here, right? You know, at the top. You know, I could totally see this collapsing. I don't see this as a bottom. I'm just not convinced of that yet. I don't know what it's going to take for me to be convinced that U.S. Treasury bonds are going higher. It's kind of, that's how I see it. Maybe like a breakout above that, and then the 200-day moving average kind of smooth out. I'm not really sure. Here's gold. You know, not an uptrend, more of like a sideways trend, like near the upper end of its range right now. I don't know. I don't love it. You know, I'm just not. I'm not there yet. I just don't see it. And then yen. You know, notice how they all kind of look similar, don't they? You know, they're kind of like in this range. They kind of got killed, right? Kind of a mess towards the upper end of the range. Downward sloping 200-day moving average. Very similar. Yen, gold, treasuries. So, you know, definitely interesting to watch that we're at the upper end of the range. So do we break out of this and then equities, you know, have a correction that everybody seems to be fully expecting and prepared for? You know, people even building, you know, shelters and whatnot. So not exactly the sort of environment that I would consider a top. So I still think that we're in a buy weakness environment. And the most important charts that, you know, I think are worth watching, we can look at the German DAX. You know, this is it for me, guys. You know, this is it. If we take out last week's lows, that's going to be a big problem, real big problem, right? Because that eliminates this as the possibility, right? If this is what's going on here, right? Notice how momentum never even got oversold. If this is what's going on here, and we're going to get a rip, right, from this former resistance here, if that's what's happening, that's going to be like the most bullish thing ever. Right? But if that's not what's happening and we're going to just collapse from here and we take out those former lows and we start getting oversold, this is a much bigger problem than we have in our hands, because now we're going to be somewhere below this 200-day moving average down here. We're going to have all this overhead supply to concern ourselves with, momentum in a bearish range. That is just not a bullish environment. And if Germany looks like shit, then, you know, America probably doesn't look that great either. And being super bullish is probably not the best bet. So we as bulls, and I am one, I'm fully expecting a breakout here. We want to see a breakout. But the good news is, and the best part is that if we don't, and we do roll over, then I guess the energy stocks are right, and you know, we're in a lot of trouble. So I think that the German DAX is definitely one of the most important things to watch. So thanks for listening, guys. Have a good one.